Hello and welcome to Crypto Weeklies. Today in this video we are going to analyze XRP. We'll be conducting machine learning based price analysis, regression analysis as well as accumulation strategies and estimated bull target. For XRP, none of the content is financial advice. The reason we are discussing XRP today has been related to the last 24 hours. One of the top rallying cryptos, about 5% gain, price at around 67 cents, market cap slightly under 40 billion. By market cap it's ranked number 6th, and in terms of tokenomics, 100 billion max supply, out of which about 56% is in circulation. That means again going forward, as the tokenomics approach more than 65% of max supply in circulation, the impact of token dilution should be minimal. If you check out the last 1 year, this is the market cap chart, and if you toggle that view from market cap view to price view, you are seeing that essentially the charts are one and the same. That means any growth in market cap is getting reflected back in price. In terms of now analyzing some of the technicals before we go to the machine learning based price forecast, this is the weekly price action of XRP, and there are two analysis on this screen. First is the Fibonacci levels on this retracement from the 2021 peak till 2022 bottom, and corresponding key levels to watch, as well as the bull market support band analysis, which is what is XRP doing with respect to 20-week simple moving average and 21-week exponential moving average. Just 21-week exponential and 20-week simple moving average confirms a breakout of XRP from this structure, where for the last several weeks price was below the bull market support band. Now there has been a breakout from the levels between 55 cents and 57 cents, and now the prices are close to 67 cent. The key level to watch is the 0.236 Fibonacci level coming in at around 69 cents. If you see that prices have not ever since the last time was July 2023, prices did not have a weekly close above 69 cents. There were several weeks above at a weekly level above 69 cents, but XRP failed to close the week above 69 cents. So that's a key level to watch, about 2.5 cents from the current price. Then the 382 level in terms of Fibonacci level at around 93 cents. So that's the secondary level to watch. And the third level to watch is at around $1.13, which would represent about retracing half of the move from the bear market low of about 30 cents to the bull market high about $2. So those are the three key levels to watch. Now we'll focus our attention to the website. All of the content from now on is available on cryptoweeklies.com. The link on the bottom of your screen has data analytics for most of the top 100 cryptos by market cap. Today we cover XRP. This is the weekly price action of XRP, color coded in white. This price action has been fed to the machine learning model for its training, and per the model, there are three scenarios. First is the trend, which is the line in pink that highlights if the prices are more likely to go up or down. The bull case is in yellow, the bear case is in green. This is the at 1 standard deviation or non-euphoria bull case for XRP between now and middle of April 2025. For this week, the 1 standard deviation ceiling is at around 80 cents, about 13 cents higher than the current price. And if we go ahead till about middle of April of 2025, that 1 standard deviation ceiling forecasted by the model is at around $2.25. So that means from current price of about 67 cents, that represents about a between 3.5 and 4x gain. In terms of the bear market, if the prices go down, the bear market support is between 31 cents and about 61 cents, and these values shift by week as we progress week by week. That's why it is key to know for any week what is a potential ceiling or a potential floor, and also the overall directionality of how the forecast could pan out in the future. Again, the prices, if they have to go down or up, is determined by the market forces. That is not the job of a machine learning model. If the purpose of this model is to determine if the market were to have a favorable or a bullish case, what are the theoretical ceilings if the market were to crash down, what would be a theoretical floor, and also what is the overall trend behind the price action, if the trend is pointing a likelihood of upward momentum or downward momentum. Right now it's you can see that as XRP ever since June of 2022 has been making higher lows. Again, this could be a an exception to the rule, but over a macro trend for XRP has been continuation of higher lows about 2.5 years. So that's no wonder that the trend is up for XRP. And now we'll spend some time on analyzing the regression based polynomial regression based analysis for XRP. This will get rid of the other bands. We'll just analyze what is the fair value in terms of this pink line, which tries to cut the price action of XRP in favorably into the bullish and bearish phases by again having a non-linear relationship with price and time. That means during the bear phases, the fair value goes down with time, trying to cut the bullish and bearish phases within the bear phase equally in half, and then during the bull cases again has a slightly upward bias. In the bear market, again you can see that ever since November 2023, when the bear market ended, the pink line has had a significant upward swing. Right now the fair value per this pink line, or the polynomial regression valuation, is at around 60 cents. That represent about a 6 to 7 cents overvaluation from the fair value. But you can see that during the bull market, there are instances where the back in 2021, when the fair value was at around 48 cents, and the eventual peak was somewhere at around $2. So for that we have several residuals or standard deviation residuals applied on the regression based valuation. They point to that at one standard deviation ceiling, you can see during the bear market it's highly unlikely that the prices go above this yellow line, and during the bull market they meaningfully break this yellow line as a resistance, and then this yellow line does offer some sort of support during the bull market dumps. That one standard deviation residual applied to the regression valuation coming in at around 91 cents. So 91 cents XRP would be again during the non-parabolic moves of the bull market, that is one of the price target. During the parabolic or the euphoria phases of the bull market, you can see that the 2 standard deviation ceiling gets taken out. That 2 standard deviation ceiling is coming in at around $1.40 at this point in time. And again, not the least likely is the 3 standard deviation ceiling to the upside at coming in at around $2.11. So that's all related to the regression based valuation, the 3 values being 91 cents, $1.38, and $2.09. Towards the bear case scenario, if there is a dump and market corrects, the one standard deviation floor becomes the more likely scenario to watch for. One standard deviation floor at around 39 cents for XRP. Again, this floors and ceilings have shift as we get more and more data about the recent price of XRPs, and this chart get updated every single day. So if you are interested in following along, you can subscribe to the channel. Also give this video a like to stay updated on the XRP's future into the later part of 2024 and 2025. Now that we have covered regression analysis, we'll spend some time on accumulation. There are 3 models that we want to discuss: the SMA, DCA, and the TWAP model for accumulation. The first is SMA model, which handles the price, the relationship between the price and the 20-week simple moving average, and based on the distance and the relation between proportional relationship between price and time, this color codes are assigned. Again, the low risk environment are again between 0 and 1, and 0 and 0.1 being the lowest risk, and 0.9 to 0.1 color coded in dark red at highest risk. So the purpose of this model is to identify based on your own risk threshold what are some of the levels above which DCAing makes it highly risky to in terms of if the price has moved significantly away from simple moving average, 20-week simple moving average, that is. So for example, if you are of the opinion that DCA for XRP should be made only when the risk levels are less than 30%, you are avoiding these parabolic moves, DCAing during these parabolic moves to avoid basically to buy the top. And again, if you have more conservative approach, and if you would like to only DCA when the risks are less than 20%, you are essentially getting the benefit of not DCAing during any parabolic move for by XRP, again not buying the top. Again, that's one of the ways to interpret the model. The other being, again, going forward, what are some of the key risk-based price action. So right now the price action at around between 62 and 63 cents represent about 10% risk and 90% reward. And going forward, the key risk levels to watch at around 60% risk, price action forecasted at that point at around $1.35 for XRP. Between 0.6 and 0.8 risk, the price action is between $1.35 and $1.62. That represents a decent price target in case of a bullish surge in the wider crypto market, and the lofty goal being somewhere between $1.69 and $1.89 for XRP. Again, the way that is calculated, you can that is also available on the website. The second model that we have related to accumulation, related to the the polynomial regression based analysis that we analyzed at a weekly level. This is applied at a daily level based on the proportional and time adjusted distance and relationship between the price and the fair value polynomial regression trend line. The color codes are assigned, and also on top of the color codes are there peak regression, which is the dotted red line, and bottom regression, which is the green line. Based on this regression model, again, the purpose is again to avoid either DCAing out of the market when the risk levels are, let's say, you would like to, the opposite of that is you'd like to DCA out of the market only when the risks are higher than 50%, that is during these phases of the market cycle. Again, identification of when to DCA out makes sense with this approach. So that's one way to interpret this model. Again, per this model, right now the risk levels are somewhere between 0.2 and 0.3 at around 28% risk. And per this model, again, somewhere the price based risk levels are at around between 35% and 40%, and this is a very conservative model to identify some of the scenarios where a DCA out of the market or risk levels signal a local top or high likelihood of local top between 84 cents and $1.18 for XRP. This is the moderate range, and the higher end of the range is between $1.24 and $1.40. Kind of a confluence between the two models at around $1 between $1.20 and $1.40. And last but not the least is the time weighted average price model. Takes into consideration how the price is doing with respect to the time weighted average price, how far overvalued or undervalued the price is with respect to the time weighted average price, and based on that price we can see that right now the time weighted average price is around 52 cents, representing a risk of about in terms of between 0 and 1 at around 32%. So just to come up with a estimated bull target or bull run peak based on the three models that we discussed, right now the price at around 67 cents, regression risk, that the DCA risk that we saw at around 30%, the time weighted average price 33%, SMA risk at around 30%, weighted risk at around 32%, the bull run target based on the risk reward expected value at around $2.01, representing a reward of about a 3x from the current price of about 67 cents. So with this I would like to conclude the video. Hope you enjoyed the content. If you did, please subscribe to the channel, also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.